Good afternoon. It's December 21st, Monday, and we're going to have a little bit of a holiday special here with the Grain Marketing Producer Webinar. This is following the USDA crop reports that came out back on December 10th and bringing us up to date on some of the other events and things that are happening in the grain markets right now. So as we go through the webinar today, here's what we're going to cover. We're going to go back to December 10th and look at the supply and demand tables that were updated, changes that were made, and possibly additional changes that are coming down the road. We'll take a look at the December 10th world crop production updates from the USDA. That will include crop production updates for both corn and soybeans out of Brazil and Argentina. Then we'll talk about corn and soybean exports. Remember, there's two different export reports that we get on a weekly basis. On Monday, we get the export inspections report. That's the grain that's actually left the country, inspected and on its way. And then on Thursday, we get the export sales report. We want to take a look at both of these because there's some differences as far as corn and soybeans and the pace that we're on right now. And it's very important as we go forward here. We'll take a quick look at China and the Phase 1 trade agreement, how they're doing. They've been buying a fair amount of soybeans and pork and sorghum and some corn. And a lot of the market's hinging right now to see how much more there's going to be, especially on the corn side, and how long the bean program is going to last. And that ties in with the next topic of the South American 2021 crop production estimates. We'll take a look at both Brazil and Argentina, and also how the current La Nina is stacking up. What is the status right now? What do we need to be watching? And what is the potential impact with that South American crop? Then, of course, we'll take a look at our corn and soybean price charts, basis as far as where we're at right now today, possibly some outlooks as far as what might be coming down the road. And hopefully, as we go through this information, we talk about some things that can point out some grain marketing opportunities to you. It is hard to get the one-on-one communication when we do these webinars, and of course that's different than the face-to-face meetings we're used to doing and that we enjoy doing, but this is what we have for technology right now. So if you have questions or comments, positive or negative, please forward them by email, phone call, or text message, and I will do my best to get back to you as soon as we can. Okay, as we go forward here now, let's look at the overall supply and demand tables that came out on December 10th. And we're going to start here with the U.S. ending stock projections. Way over on your right-hand side of the screen, you can see the WASDE or November 10th ending stock numbers. Remember, the USDA crop year ends on August 31st. So this is what's projected to be left over and sitting available for the marketplace on August 31st, 2021. Going into this report, we see wheat up here on top, and we'll talk just briefly on wheat. 877 in the November report. Trade was looking for that to be about unchanged, and actually the USDA lowered that ending stock number about 12 million bushel. Still more than adequate, but it was a real subtle change in the fact that as this came out with this wheat stock number coming down a little bit, also news in the marketplace that Russia is planning to put an export tariff in on wheat to the tune of about $27 a metric ton, which if in fact they follow through, that's going to change the export dynamics as we go forward here and could make the U.S. a much more attractive candidate for wheat exports in the world. On corn, line 2 here, 1.702 is the ending stock projection in November. The trade was looking for that to go down to about 1.691, a slightly lower estimate. USDA came out and left that totally unchanged. Absolutely no changes in the corn supply and demand table at this point, and we'll look at detail on that in a minute here. On the soybean side, ending stock projections in the November report, 190 million bushel. Trade was looking for that to drop to about 168 because we've had soybean exports go at a faster pace than what we were anticipating previously. And the USDA actually came out pretty close to that number, but a little bit higher than the average trade estimate at 175. Now, with the pace that we have going, there's a lot of folks that think there's a potential for both of these corn and soybean ending stock numbers to go down in future reports. A lot of that's going to be driven by the pace of exports, and that's why we'll be looking at that export information here in a minute. On the bottom of this page are the ending stocks for the world. And remember, when we talk the US, these are all in bushels. When we go to the world, it's metric ton. So if we look at the wheat number, 320 in November, 321 was the average estimate, pretty close to unchanged. And this was a little bit of a surprise where the WASDE report actually showed wheat ending stocks for the world down to 316. That came from a couple of crop production reductions across the world, but also a significant change in the wheat feeding in China. Corn has been very expensive in China, and they're substituting other feed grains, and wheat is finding its way into the rations in China. So that may impact how much corn they buy down the road here. On corn, 291 in November, 289 was the average estimate. USD or WASDE report come in very close to right about at 289, so pretty close to the average estimate. You can see all of these ending stock numbers for the most part very close, but actually a little bit on the lighter side than what the market was anticipating. Okay, here's our supply and demand tables for the current crop year. Over on your right-hand side, 2020-21. Remember, this will end now on August 31st, 2021. To your left, the ending stocks projections and the balance tables for the last crop year. We can see, as we said earlier, no changes here at all. Big change in the November report when they took that corn export number up to 2.65 billion bushel. The market was looking for this possibly to go a little bit higher. USDA did not make that change in this report. They were concerned about the ethanol possibly being reduced a little bit, but left at 5.05. Still a lot of concerns on the ethanol side due to the slower driving pace and slower recovery as the United States comes out of COVID. Now, as we go forward here, in the January crop report that'll come out on January 12th, at that point, the USDA will issue their final yield estimates for the crop of the 2020. Also probably make some changes depending on how the stocks report comes out on the feed residual category. So a lot of these numbers will be changing down the road, but not now until January. Average price for this crop year left at $4 a bushel on the corn side. Now, as we look back, let's go back here for just a second. Remember, we always talk about the stocks to use ratio. And in this case, since there was no change, this will be unchanged from the November numbers. But to find that, you divide this 1.702 divided by the total usage of 14.825, gives us a stocks to use ratio of 11.48%. Now, when we look at a chart from StoneX that shows when the market gets real excited about corn, a lot of focus is on the stocks to use ratio. And you can see right now, with our stocks to use ratio at about 11.4, 11.5%, the market is in a fair value right around this $4, maybe to $4.20 a bushel in Chicago. For this market to really get excited and want to work higher, we have to start seeing the stocks to use ratio on corn get down to about 9% or less. That's when you take the next leg up to substantially higher prices on the corn side. What about soybeans? Minor changes in this crop report on the soybean balance table. You can see that exports were left unchanged at 2.2 billion, and crush was actually increased 15 million bushel to 2.195. That's where our reduction came from 190 in November down to 175. So as we go forward here on beans, a lot of folks are thinking this bean export number has to go up. Some talking possibly as much as 50 to 100 million bushel. And we'll look at how we're standing on the export pace in a few minutes here. But a lot of this will be dependent on how the crop in South America comes along, especially in Brazil, and how quickly they begin harvesting and getting those soybeans into an exportable position. Because even a couple of extra weeks, if that harvest is delayed down there, that can bring business back to the US if China really wants to keep their pipeline full. So you can see even a half a month of new export demand or demand from other countries, and this 175 is a very tight number. Let's talk stocks to use ratio on the soybeans. Remember the same mechanics as we looked at on corn. We divide this ending stock number of 175 by total use of 4.534, and we come up with a stocks to use ratio on soybeans of 3.86. That is getting extremely tight, and that's why we're at right now price-wise and basis is strong, demand is strong, because these are very, very tight numbers. No room for error in this balance table on soybeans. If we look at the average price, we're well above that now, but USDA in this report raising the average price for this crop year up 15 cents to 10.55. That's what they're projecting for the soybean price for this current crop year. Started on September 1st, goes until August 31st, 2021. Now here's our stocks to use table on soybeans. Remember, 3.86, a whole different world than on corn, where we were kind of out here in an area that we're still comfortable. On soybeans, this 3.86, you know, we're in an area here where history tells us we should be between $12 and possibly $13 a bushel on beans in Chicago, or even higher. So this balance table on beans, extremely tight, extremely sensitive to new demand and possibly crop production issues as we go forward here. This also creates an interesting battle for acres as we get into the 2021 spring, to see what the American farmer is going to plant as we get into this next growing season. Okay, let's talk exports now. Here's our export inspections report charts on corn. This is through this morning now, and that's why I waited to put this presentation together on Monday rather than after Friday's close, because we wanted to see once exactly what was going on with the export side, and that came out this morning about 11 o'clock. Here on your left-hand side, we can see in the dark blue the week-by-week export inspections that have been going on corn. This is the grain that has been shipped. This lighter gold line here was last year's pace. So you see we are inspecting and exporting more corn than a year ago, but this is the line that we need to be at or above to meet that current USDA projection of 2.65 billion bushel. You see, we haven't been there yet this year on any of the weeks, so it's a little bit of a concern. And over on the right, you can kind of see how the week to week goes. We've had a week around 40 million bushel, but you know, we need to be higher than that to meet this last change that the USDA made in the November report. Now, the one thing that the market's optimistic about, as you look forward here, here's our crop year down at the bottom, start in September and go till next August. You see historically, the market, we tend to start exporting more corn as we get about into January forward. As we start slowing down on soybean inspections, because South America comes into the market and takes over the global marketplace for the most part, we see space at the export terminals in the US pick up. And the market's very hopeful and optimistic that this happens this year, because we're very competitive on price. Now, when we look at the export sales report, we see a little bit of a different story. On the export inspections report, we've only inspected about 475 million bushel out of the projected 2.650. So, you know, those are below average. And that's why this corn market is still kind of, you know, marching in place, just waiting for news, because we've only exported about 17.9% of the corn projected for this year. You know, we're well into it. We finished September, October, November, December is almost done. So we almost have 4 months done, and we're only 18% done with our inspections. We've got a long ways to go. Now on the sales, it's optimistic. Out of the 2.65 billion bushel projected, we have 62% of those bushels sold. And so if you look at the export sales analysis on the bottom here, here's last year's export sales. Here's what we need to be to meet the 2.65 billion set by the USDA right now. And here's where we've been week on week in sales. So we are getting the sales on the books. The market's a little bit concerned right now that we need to pick up the shipping pace. Hopefully we start seeing that happen shortly. Now, here's a table that we've looked at before, and this came out just this morning. This compares the world corn FOB offers. In other words, if you're a buyer of corn in the world, these are the 4 places you're going to look for pricing and availability: the Ukraine, the United States, Argentina, and Brazil. And you can see with the US at $217 a ton on corn right now, well below Brazil, Argentina, and the Ukraine. And that competitiveness stays all the way out. This particular table only goes through April, but the US has the cheapest corn in the world through May of 2021. So the next 5 months, there is potential that if someone needs to buy corn in the world, they should come to the US. We have the bushels to go. But keep in mind, we have to see these inspections start picking up the pace because we've got a long ways to go to get that 2.65 billion bushel number that the USDA gave us in November. What about soybeans? A whole different world. Here's our inspections on soybeans. Last year's pace in the lighter gold, this year's pace set now at the 2.2 billion bushel. And you can see with just the exact opposite on corn, where so far this year on bean inspections, we've been above that number just about every week. So looking at it here, you know, there's been a couple of weeks we've had over 100 million bushel of soybeans. This morning's export sales report came in at about 93. Huge numbers. You can see how much higher they are than a year ago and on even the 5-year average. What's driving that? Well, it's China. China's buying a ton of beans from the US, and part of that might be a little bit to phase one, but really it's the fact that Brazil is pretty well sold out of beans. Argentina's having dock strikes and all kinds of issues down there. So when China needs beans right now, they're coming to us and they continue to buy. And we've even seen some interest now for them as late as mid-February, which a year ago, they would have been sourcing all their beans out of South America at that point, out of Brazil. So that's encouraging. Like I said, just a couple of weeks extra demand, extra inspections out of the US can really tighten this bean table up even more than what we're seeing right now today. Here's the export sales analysis on soybeans. And you can see a lot of the same things. Much higher than a year ago on the week to week, much higher than what's projected by the USDA at 2.2 billion. In fact, from a sales side of soybeans, we've already sold 90% of what the USDA says that we're going to sell for soybeans all the way out to the end of August. Now, of course, you have your negative people out there who say, well, maybe China's going to cancel some of these beans, and they could, but maybe there's going to be other people that come in and buy, and maybe China isn't quite done yet either. When we look at the inspection side, we see a better picture on soybean inspections also. Through today's report, 1.191 billion bushel inspected by the USDA already for bean shipments this year. That's against the total projection of 2.2 billion. So we've exported 54% of the beans that the USDA said we were going to already. And this is why a lot of the marketplace believes this export number on soybeans will go higher over time. It depends on South American crop, depends on how long China continues to take US beans, but other people in the world too. We still have beans available and we are competitive right now. Although as we get to February forward, we start running into much more aggressive competition out of Brazil. When we look at combined exports for corn and soybeans out of the US, and this goes back all the way to the year 2000, and you can see here's where we're at right now, and this is through week 15, which have been through last Thursday's export sales report. Soybeans in the orange and corn in the green. You can see we are at record type export loading numbers when we combine the two grains right now. So if we go forward here and see some of this soybean business start to decline as Brazil becomes more aggressive in the export market, definitely room in the US export system to move more corn as we go forward here. Okay, let's take a look at South America. Here's our table for South American production, both for Argentina and Brazil. Down on the bottom here, bottom line, you see the November estimates by the USDA. Argentina corn in November at 50 million metric ton. USDA in this report lowering at 1 million metric ton to 49. And on soybeans in Argentina, 51 million metric ton in November, lowered down to 50 million metric ton in this report. Definitely some drought conditions in part of Argentina caused by the La Nina. And right now it just doesn't look like that's giving up yet. And still some concerns as we go forward here. I listened to a conference call this morning from a trader in Argentina, and this is what she was willing to share. The Argentina corn crop is about 60% planted right now. As of their good to excellent ratings that they do similar to the US, about 63% of that crop rated good to excellent. So it's not a disaster, but she said they are entering the key pollination period. They have two crops of corn that they plant. and the one crop is going into pollination right now, definitely needs timely rains to maintain. Her estimate on crop production for corn out of Argentina matched the USDA at 49 million metric ton. On soybeans, she was estimating 72% of the Argentine soybean crop planted, 50% good to excellent. A lot of stress, a lot of dryness in some of the main soybean areas. Her soybean production number was 49, about a million metric ton lower than the USDA estimate. And she said one of the concerns in Argentina right now is there's about 2.2 million hectares of soybeans not being planted because the farmers believe their soils are too dry. So this can definitely impact yield and or acres as we go forward here. So that needs to be watched closely. The reason that Argentina is very important to the whole bean complex of the world, Argentina has its crush facilities on the ports right along the coast. They ship the beans and then they export the meal and oil. So we'll talk a little bit later what impact that may have on the US if their crop gets smaller, or if they have issues crushing beans down there. That could bring some meal business back to the US. Really doesn't matter how it leaves this country, whether it's in whole beans or soybean meal. That can affect this balance table as we go forward. What about Brazil? In November, USDA had the Brazilian corn crop 110 million metric ton, left unchanged in this report, as was their soybean number at 103 million metric ton, left unchanged in this report. Both of these would be larger crops than a year ago and very large, especially on the soybean side. A lot of competition, but we have to get there. And right now, we don't know for sure when harvest is going to start in Brazil and how quickly they'll be able to get that into an exportable position. Okay, let's look at the weather side a little bit here. And here is a current map, I think from, well, it's about the 12th of December. So it's got a little bit of an age to it, but I don't think the pattern has really changed that much. Here we have, of course, the US right here, South America. And if we look at the equator right along this blue line, here's your equator, and all of this blue is below normal sea surface temperatures, or SST. This is a classic La Nina. In fact, it looks like it's a fairly significant La Nina. This was a study that was put together by the University of Illinois, and it goes back and shows previous La Ninas. In fact, we go all the way back to January of 1977 up to the current. And here's our current La Nina. To really be considered a meaningful La Nina, we need to see a deviation of at least a -1. And you can see this is a decent one. There's been stronger La Ninas back in 2010, 2007, some of the late 90s, but this is a La Nina. Now, as we go forward here, and this is a more recent picture, it looks right now like the La Nina peaked about mid-November when we had that number down to about a -1.25. Now, since then, it's actually looks like it's weakened a little bit, then it got a little bit stronger, but it's still staying right about that -1, which it needs to be at to continue to classify it as an active and meaningful La Nina. So what does that mean to corn and soybean outlook? You know, here, part of the study was, it looked at historical data between previous La Ninas in both Brazil on your left and Argentina on your right. And what were the average trend line deviations from yield? And what we see here on corn, on the average, about 0.7 of a bushel off a trend line yield. So a little bit below trend on corn yield in Brazil due to La Nina. Now, the unfortunate thing here is it's not all negative, because if we look at La Nina years in Brazil, soybeans tend to end up about 0.8 of a bushel above trend line yields. So that's why the market is real reluctant to come down on yield estimates out of Brazil, and probably why the USDA left that unchanged at 133 million metric ton for this crop year. Now, there are some people that say this has been a different La Nina, and there are parts of Brazil that appear right now to be impacted more than previous La Ninas. But we have to wait and see. There's a lot of growing season to go yet down there. And for instance, this weekend, rains were pretty good in Brazil, not so good in Argentina. Now, what about the effects of La Nina in Argentina? This gets to be pretty dramatic, because here we see on the average 7.7 bushel per acre below trend line yields in Argentina during a La Nina. Argentina is one of our main competitors on corn exports in the world. So this is something, once again, that if the global traders start feeling like this Argentina corn crop is not going to be what they need it to be, could bring more business back to the US for corn as we go through the next 5 to 6 months here. On soybeans, likewise story. Average deviation from trendline yields during the La Nina in Argentina down about 2.2 bushel per acre. That's a big deal. And that's why, you're seeing some of these numbers in Argentina slip a little bit more, because they still are very dry and in need of timely rains as we go forward. They're entering their pod fill stage on soybeans about the next 4 to 6 weeks. That'll go from basically, no, not quite yet. Mid-February into March is when the key time is for soybeans down there. So there's time for the rains to come, but they need them to come to keep the crop growing and healthy as we get to that point. This is a chart from StoneX that kind of shows we have Argentina soybean production on the bottom, these lighter gray lines, and you can see the red circles are previous La Nina years, and typically crops are smaller, impacted more in Argentina. The dark blue lines are soybean production in Brazil, and you can see even during La Nina years, they tend to possibly be down slightly in Brazil, but not to the effect that they usually are impacted in Argentina. So what if Argentina has a short crop, especially on the soybean side? Remember, they are the crusher of the world. They process beans and export the meal and oil. So if their crop is small, that conceivably could bring more soybean meal business back to the US. Our capacity right now is just about maxed out in the US. In the last crush report that came out last week, 181 million bushel crushed for the month. We could possibly squeeze another 20 million bushel or so, but there's not a lot of room there. So, somebody else would probably have to pick up part of that void, and part of that void could be picked up by Brazil. The problem with that is Brazil's crush plants are located inland, so they would have to get to the beans to the bean plant inland in Brazil, then truck or rail the product to the ports and put them on a vessel. That's not cheap, and that's costly. That could possibly drive the global price up for soybean meal, and possibly making people and feeders in the world look for alternatives. In this particular case, if soybean meal from a price standpoint gets very expensive, could possibly bring some demand back in favor of using DDGs or alternative products down the road. Okay, what about China? We all know about the phase 1 agreement. And in phase 1, they were supposed to purchase a total of 36.5 billion of US ag products in 2020. Then COVID hit. COVID hit them, COVID hit the world. And we haven't really pushed the issue too much. They're not going to make the 36.5 billion, and I think COVID's probably a valid excuse on their part. So far, through October, they had purchased 17.5 billion, so they had about 19 billion to go. But with all of the soybeans that we've been shipping to them in November and December and sales on the books for January, we're going to make a pretty good dent in that. And it's, they've made a pretty honest attempt to try and get that. Now, next year, they're supposed to beef that up to 43.5 billion. China buys what it believes it needs. We really don't think that they're doing a lot of this buying because of phase 1. They need this corn, they need the soybeans, they need the pork. Now, there've already been reports after the election that China has put out a test balloon with the Biden administration coming into power and asked for this phase 1 to be renegotiated because they believe it was too one-sided and favored the US too much. Now, that'll be interesting to see. So far, no comments really from the Biden team on what they intend to do with this. But the feelings in Congress is that the US needs to maintain or even make a tougher line on China as far as meeting some of their obligations with intellectual property and those type of things. So this will be something to watch down the road, not really an issue right now. If they need the product, they're going to buy the product. And here's just a couple of charts that kind of show where they may be still needing more. This is nearby corn futures in China, the Dalian exchange. And if we can equate that back to US dollars, corn prices there are well over $10 a bushel. Now, that doesn't mean that they're going to necessarily buy all US corn. It works. Even with futures at 440 in Chicago today in the US, you pay the freight, you export it to China. Yes, our corn would be cheaper than their corn, but because of this, the Chinese are looking for other things to feed. They're buying barley from us, from Canada, from anywhere in the world they can find it. They've pretty much cleaned the US out of sorghum and milo. And, you know, wheat, they have a huge wheat stocks in China, and feeding $6 wheat versus $10 corn, they have alternatives they can do. So that's why it's tough to say that the Chinese are going to definitely buy US corn. It would work, but you know, it may go against some of their thinking, and we'll talk about that in a second here. On soybeans, here's their current crush margins in the dark blue. So, you know, they're quite profitable, higher than what they have been the last few years, but they are actually down off of their lows a little bit. Now, some of this may be the fact that on their newer purchases of soybeans, of course, with our market going higher, they're having to pay a higher price for those beans to process. That affects their crush margins. So what about the corn needs of China? U.S. attaché came out with a change here within the last month saying that they thought China would need to import 22 million metric ton of corn. The Communist Party, Central Communist Party, or CCP, still is holding a line that they say only 7.2 million metric ton of corn will be imported. Well, that's a ridiculous number because they've already purchased more than that. In fact, they've probably purchased close to 11 million metric ton just out of the US, and some out of the Ukraine, and some out of Brazil, and some out of Argentina. USDA right now has corn imports into China out of the US at 16.5 million. Estimates are 11, 11.5, or 12 that they've probably taken so far. So there is room for some more potential buying. But what really gets the market nervous and excited about this potential with China corn is there's estimates that if you look at their production of corn and what they're trying to feed now as they rebuild their hog business, it looks like they are short about 30 million metric ton of feed grains. We have to be careful though. That doesn't necessarily have to be all corn from anybody. As I said, they're feeding wheat, they're feeding barley, they're feeding sorghum. They're trying to use some alternative crops, you know, to get that feed grain taken care of that they need. If they actually would commit to importing 25 to 30 million metric ton of corn, it would be a major, what StoneX calls a seismic shift, an earthquake, because this would be against the CCP, China Central Communist Party policy. They've said, and they've told their people that they're 95% self-sufficient on corn and feed grains. If they were to come out and import this much corn, it would definitely shoot a hole in what they've been telling their people. Now, the gap can be filled with alternative grains. They're doing some of that now. It also works against their idea of raising incomes of the rural farmers. But longer term, you know, if China continues to grow their hog industry, rebuild it now, I've seen a report that they think they're close to 85 to 90% back to where they were pre-African swine fever. In fact, there's a picture that we'll maybe look at in a different webinar, a new hog setup that they're building and actually starting to operate already in China. One setup, 84,000 sows. That does not include the little pigs, the replacements. This is 84,000 sows at one site. Unbelievable. So they're consolidating their hog industry, taking a lot of the smaller farms out of business, to say, because safety protocol and everything. This is where African swine fever really originated and spread. So they're going to try and consolidate everything. Very large, modern, very efficient production facilities. Now, that's going to probably take them away from buying much pork from the US, but definitely there's going to be more needs for soybean meal and for feed grains to feed all of those pigs. As we go forward here, here's the formula from Arlen Suderman that we always like to look at from StoneX. Price is the function of supply and demand, but it's always a function that's modified by the flow of money. So let's look at what that flow of money has been like here lately. And as we look at where we closed today, CFTC numbers after today's price action. The CFTC report comes out on Friday. That's based on the previous Tuesday, but on Friday it showed, a report that the managed money crowd long about 276,000 contracts of corn. They purchased about 6,000 contracts today, and you can see that puts them as long corn as they've been in the last month. And if we go back, I just put on this for a point of reference. We have to kind of keep in mind that back in the early days of August, before this thing really kind of got started and got some fire under on corn, this same managed money crowd was short almost 200,000 contracts. So they've really converted their positions. Some of this potential on Chinese demand, the USDA taking that export number up to 2.65, the crop being not quite as big as what we had thought it was going to be. A lot of those things are now in the marketplace. What about soybeans? They purchased, I think, close to 20,000 contracts of soybeans today. A lot of that driven by, I think, the disappointing rains in Argentina over the weekend, and the 224,000 long positioned by managed money now also as high as they've been in the last month. We go back to mid-August, they were long about 47,000 contracts. So definitely pretty significant increases in the length of the managed money crowd that is on both corn and soybeans as we've went through the last couple of months here. One of the reasons why the market rallied the way it did, the flow of that money, more buyers and sellers, and that drives the market higher. So here's our nearby corn chart. This is actually through Friday's close. I didn't update that today. Corn up a couple of cents, I think, but not a real active day. And you can see if we look at where we've been the last month to two, November and December, kind of a sideways pattern on corn. We go up and test these areas, and then we back down a little bit. RSI going home on Friday, about 70 on corn. So we're getting a little bit closer to being an overbought position, but this is a unique market where we have concerns about supply, like the Argentina corn crop, the Brazilian corn crop, but then we also have concerns about demand. So we've really got both sides of the equation kind of battling right now. If we look at a monthly chart on nearby corn, and this is a number that we actually now, I think is first time we closed above it today. Wasn't a big move, but just above the 440 area. And you can see we've had this 440 area nearby corn in Chicago. That's a significant swing point if I look at these monthly charts. For us to go through that, something meaningful has to be going on. Back in 2019, we had some concerns about weather, about production. We took that up to 464, but you see it didn't last very long. We can go back to 2016, 2015. For us to get into this type of environment where we go sharply higher on corn, we're going to probably have to see a couple of things happen. We're going to have to see export inspections pick up dramatically, export sales continue to increase, and that's not completely out of the picture right now. Current carryout projected at 1.7 billion bushel. There's a lot of folks out there in the marketplace that believe that corn export number could go up another 100 to 150 million bushel, and that ending stock number could get down to about 1.4, 1.5 billion bushel. That would definitely support this market to work a little bit higher. But we're not quite in the camp here where we can get up into these $5 and $6 and $7 corn prices. Remember that stocks to use ratio still about 11.4%. That needs to get a lot tighter. So we either need to shrink the crop or increase the usage as we go forward here. Average price projection by the USDA, $4. I think that will go higher as we go through these next few months here, because it looks like this market wants to go up and test some of these other areas. And of course, when we talk about where this market goes, we have to look at other grains. We have wheat, flirting around with $6, and beans now today closing well over $12. So, everything has to kind of keep somewhat in relation. But don't forget, if we look at where the corn market has been the last 5 years, we are definitely up or 10%. So not a time to be getting too bullish, probably a time to take some opportunities and make some sales as we go forward here at good profitable levels. This is what they call a histogram. And we're not going to spend much time on this, but you can just kind of see as these prices go higher, these little blue dots on the number of days that you spend at those prices get to be pretty small. You know, you can see where a lot of the average prices are on corn historically, and it's about 355 up to about 385, 390. Well, we're well above that now, so we need to kind of keep a close eye on marketing, not only for the crop that we raise, but also as we go forward here, if this market continues to rally. Don't forget about new crop acres and the production that you're planning to raise in 2021. Here's nearby soybeans. Nice uptrend going all the way back to last April as we come out of COVID. See demand, China doing a lot of buying, closing at 1224 on Friday the 18th, and another big day today. RSI going home, relative strength index, 9-day was at 77 on Friday. I'm guessing that's getting awfully close to 80, so we have to be a little bit careful. Market is getting up to levels where it's going to be overbought, could correct a little bit, but right now the fundamentals are pretty friendly as we go forward on beans. Looking at a monthly chart of soybeans, you can see, you know, we did a fair amount of consolidation, just like in the past, around this $10.50 to $11. But once you start getting above that $11 area and even above that $12 area, historically it tells you that you usually have to work up high enough and in a fairly rapid pace to do some rationing. This balance table on beans, 175 million. The market really believes that exports are going to inch a little higher, that crush could inch a little bit higher. You know, and there's a lot of folks that think that number is 140 to 150 realistically as we go through the spring and summer. And if by chance this Argentina or Brazilian soybean crop gets impacted a little bit more than we think by La Nina, or the harvest window gets pushed back and China buys beans out of the US for an extra 2 to 3 weeks or extra month, all of a sudden that carryout could be down to 100 million bushel. Stocks to use ratio already down to 3.86%. That's extremely tight, no room for error on the bean balance table. And you can see when we look at where we've been the last 5 years, well into the upper 10%. In fact, from this particular chart, it actually shows we're at higher price levels than we were back in 2016. Likewise, when we look at the histogram with bean prices, we're at levels right now. We just don't see a lot of days there. So keep that in mind. The market outlook is still friendly, potentially friendly, but we also have to look at the fact that these are very good prices based on what we had. We raise a crop to sell, so we want to take advantage of opportunities as they come forward. Here's our closing bid page on New Vision prices for today. And you can see very nice prices out there, everything above $4 until you get out to next new crop. What's the market telling you to do? Well, not a lot of carry left. You know, as this market has rallied, we've taken a lot of the carry out. So the carry from December now all out into the next summer months of only about 8 cents. If you have farm storage and really don't need the cash flow, you know, look to sell the carry, but really not a lot of carry there. So the market is pretty much saying you can move it whenever you want. Basis levels pretty respectable at these type of future prices. You know, the 18 under for basically May through September. Do notice that as you go forward here, that these cash markets, as we get into the August and September, still basis the July. With this market inverted a little bit out there, that's the way a lot of this is going to be priced. So be kind of careful when you're comparing prices and everything, and look at which month that basis is being talked about. Average price by the USDA projected at $4. We're well above that now. Quite frankly, if we see this demand continue and see the export inspections pick up, don't get a big surprise in that January crop report. This corn market, it feels like it's fairly solid footing right now. A lot of that will depend on what we see for demand and any possible grain stocks adjustments as we get to that report on January 12th. Soybeans, nearby beans, not quite at $12, but getting awfully close. But what is the market telling us on beans? Well, there's a little bit more of a carry, a dime carry out to February. But, you know, if we look at this here, there's a little bit of a carry from December to January to February and March. But then we start inverting here, where April and May are actually a penny less. June, July, 7 cents less. What is the market telling us? Well, the market's telling you right now, if you want to look at absolute dollars, don't hold beans past March. Now, maybe that makes a little bit of sense because about that time is when Brazil is going to come in probably as a pretty aggressive exporter, and we'll have more competition. But also as we go forward here, who knows if that carryout shrinks down to 150, 140, 120, dynamic things could happen from a basis standpoint as we wind up this year. I don't think it's a time to be holding a large amount of soybeans. Maybe your 10%, 20% or something if you wanted to roll the dice, but these are good prices with what the yields we've had this past year at harvest. We haven't been at $12 beans for quite a while. If the right things happen, can we see beans in the teens? Well, anything's possible, and you know the balance table is extremely tight, but we're going to need the right things to happen for that to continue on. So here's some take-home points, and I just borrowed this slide from StoneX, Arlen Suderman. He always has a webinar after each report, and he does a nice job of summarizing these points, and it really fits in with what we've talked about here today. Corn stocks in the U.S. are adequate, but Chinese demand is still, it's still strong. It has growth potential. Ethanol, there's concerns about ethanol demand in the U.S., mainly because of COVID and less driving. But, you know, this cheaper dollar that we have going on right now, the U.S. dollar index, that could potentially bring more buyers from the world. And right now, if you have $10 corn in China, you're probably not going to make ethanol with that. And if they decide they want to buy ethanol to offset some of the rising prices of crude oil and everything, this could be something that could be a shot in the arm for the U.S. ethanol if we start seeing some ethanol exports into China. And I think there was a vessel, at least one vessel, that did trade here over the last 30 days. So that's an opportunity. If it comes up, that could support the ethanol side. As we get to that January 12th report, we'll also have grain stocks in all positions. So that could tell us a little bit on the feeding side what's going on. You know, with the expensive soybean meal that we have right now, well over $400 a ton, is that possibly going to have feeders feeding more corn? And that could start to show up in that stocks report. Supply risks, focus on South America. Right now with the La Nina, we've talked about that, and definite concerns about Argentina and even some parts of Brazil. Soybean stocks, especially in the U.S., have no room for error. Stocks to use ratio already under 4%. You know, if we see exports bump up a little bit more, crush possibly bump up a little bit more, all of a sudden that stocks to use ratio gets down to 2.3%. That's the type of environment where if you look at that monthly chart, that's the time where you can take that next leg up. You're not going to stay there very long, but you're going to go up there quickly enough to ration demand, because we will not run out of beans, but we have to cut back on the usage or find alternative proteins. Risk number one for that U.S. soybean balance table is the fact that the export season gets extended. The Brazilian bean crop was planted a couple of weeks later. If that results in a 2 to 3 week later harvest, it definitely brings some more bean demand back out of China, or going to China. Early season adverse weather in Brazil, there's been some questions about yield. I've seen estimates on that Brazilian crop as low as 126 million metric ton, and I've seen on the other side 136. USDA is 133 right now, but who knows? Weather will still make that crop. Risk number two would be actual South American production losses. The drought gets more and more serious, especially in Argentina and especially in Brazil, and all of a sudden that total crop out of South America starts coming down, and then we just have to wait and see what happens to the world market. Brace yourself for potential big changes in that January crop report. You know, a lot of people are going to be watching that. That'll be 11 o'clock a.m. on January 12th. So we get our final crop production number at that report on corn and soybeans. We'll get updated supply and demand tables. We'll get grain stocks positions, grain stocks in all positions. And by then, we're also probably going to have a pretty good idea what's going on with that South American crop as far as a total crop. Now, once we get through that January crop report, comes out on the 12th, we will be putting out a webinar similar to this no later than January 15th. I kind of set that up as a deadline for myself. The report comes out, I believe, on a Tuesday, so it takes a little bit of time to kind of organize and get stuff together. my goal would be to try and have that out by the 14th or 15th at the very latest. Be watching for emails and keep an eye on the New Vision website, and we'll get that to you. As we wrap up then, I always like to throw in a little bit of other stuff here rather than just all the grain information. And, you know, we're approaching Christmas here, just a few days away. We at New Vision all want to wish you a very Merry Christmas and, you know, and best wishes for a lot of success and happiness in the new year of 2021. But from a personal standpoint, I picked this up out of Advent devotion book, actually put out by Indian Ministries. And I thought this is very appropriate. So here's a Christmas wish for you from me. This Christmas season, I pray that you would be able to see the story of Jesus's birth as a promise of hope and reflect on the goodness you have already received from the Father with anticipation for the amazing gift you will receive someday in eternity. You know, there's been a lot of stress this year with COVID, and all of our schedules have been upended and changed. And I mean, we've lost loved ones to this disease, but there's hope. And we're not here for this earth, we're here for what comes later. And I'd just like to end with a Christmas prayer out of the same devotion. Dear Heavenly Father, help me to spend this season appreciating the amazing gift you received when Jesus was born that first Christmas, and celebrating the hopeful joy of Jesus' second coming in the gift of eternity with you. In his name we pray, amen. It's a great day to be alive. New Vision is here to serve you. We have several locations spread out across southern Minnesota. We would love to do business with you. Our motto is, and we live this every day, service and value every day. Here's our grain marketing and origination team, Jim Den Hartog. By the way, I talked to Jim this afternoon, and he said that he's actually talking about retiring on December 31st. I said, well, you only got a couple weeks left. He said, no, not that long. So for those of you that have dealt with Jim, he's been with the cooperative for a long time. I know he's done an excellent job working with a lot of you. Give him a call and thank him for his service and wish him the best. Joel and John will still be around, and I think we have a new originator coming on toward the end of the month. They wanted to remind me, though, that the Merchants Plus sign-up program, this is one of the managed marketing programs that New Vision has offered the last few years. That sign-up deadline is January 15th. Now, when we have our January webinar, it's probably going to be a little bit late. Due to COVID, we won't be able to do our face-to-face meetings. So, you know, get a hold of one of the originators if you have any interest. Jim also did share that they are planning to have a New Vision managed marketing program again this year. That sign-up deadline will be a little bit later, possibly the end of March. So, you know, those are available. And if you need any advice or information, please feel free to call either one of those guys or call and thank Jim for everything he's done for you. Thank you very much for taking time out of your day to be a part of this webinar. Special thanks to all the New Vision employees that help with this. I know the people, they'll all make sure it gets edited and posted on the website, and everything's good to go. So if you have any questions, want to contact me personally, here's my email address, my phone. Still working at home due to COVID, but please shoot me an email, shoot me a text, and I will get back to you as quickly as I can. With that, once again, have a very Merry and blessed Christmas. Best wishes in the new year of 2021. Thanks for being a part of New Vision.